The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. Thanks for kicking off your trading day right here with me in the Morning Market Kickoff at TFNN. And we got a CPI Friday inflation print, a little bit lighter than the market had expected. You jump over to the headline number, and you're talking about a number where we get CPI year over year, 2.4%. The number they were expecting was 2.5. Core year over year, right in line. On a month-over-month basis on core, right in line. And on a headline month-over-month basis, you're only talking about 0.2%. Shelter still a big component of what's happening in there as well. Nonetheless, you come in light and the market says, hey, you know what? We might get those cuts after all. We don't have an inflation problem. We're at 2.5% right now. You talk about a reversal from Jobs Wednesday, right? Jobs Wednesday, you had lower price, higher yield, and this morning we're up another 5 ticks, continuing the move we had yesterday. You got the 10-year right now. Don't often kick off the program with the 10-year, but you better pay attention. We got lower yields, 4.08. 4.08 on that 10-year right now. You jump over the dollar. Lower yield, dollar weakness, 96.93 right now on the dollar. You jump over the metals, quite the sell-off yesterday. On a little bit of a weaker dollar, you catch a bounce on that CPI print. Gold goes from under 5,000 to just above that level. Gold up by $60, up 1.2%. You jump over to silver. Similar action this morning. You sell off yesterday, you climb higher overnight. There's your volatility on you got some lower yield, dollar weakness, metal strength. That's a $2 pop in silver, folks, on a 5-minute basis from almost 77 to 79. Silver up $2.75 right now at 78.43. We jump back to the indices. Now, yesterday, you talk about a sell-off, baby. Whew. This morning, there's your 8:30 volatility on the CPI print, but no real market reaction right now. Right? We're a little bit higher from the pre-market, but in terms of where we are on that CPI print, S&P's right now basically flat at 68.49. NASDAQ 100 slightly in the red, off 24 points, 24,744. The Dow up by 5, 49,520. So much for 50,000. Dow remarkably strong lately. Russell up by 0.25%, up 6 points to 2627. Let's take a look at the numbers on the inflation print. Okay, so there's your headline numbers. Now, when you get into some of the numbers that we're talking about within it, you're close to the Fed's 2% target, okay? Now, do you get earlier cuts, or where is the terminal rate? That's kind of the conversation you're going to hear today, right? Are we pricing in where the terminal rate might be? Okay, are we pricing in how many cuts and how quickly we're going to get those cuts? Market's trying to price in both. Shelter, 3%. The smallest since November, but yeah, shelter. Continuing to decline in terms of what that acceleration had seen. Shelter was the main contributor to inflation last month. Yeah, we didn't have such a slow print of 0.2% month over month right now. Multiply that times 12, you're at 2.4%. That's it. And now we got about a 50-50 shot of a third rate cut this year. As I've been saying, folks, I feel like, things can change. Don't think you have to forecast out until December. But as of right now, where we are with the data right now, okay, I'd be very surprised if the next Fed chair, Mr. Warsh, does not at least go for a cut on his first meeting in June, and at a minimum takes one meeting off and then cuts again and takes a meeting off and cuts again. Now, maybe that's what he does until inflation forces his hand the other way. It's possible. 30% chance of a Fed rate cut by April and more than 80% by June. All right, we'll take a look at those numbers a little bit later in the program. But yeah, you're talking about a light number, and man, how quickly things can reverse from the action we got on jobs Wednesday this week. So you have the Treasury Secretary just ahead of that release talking about that inflation could be back near the Fed's 2% target in the middle of this year. The core reading for PCE was 2.8% back in November, the most recent month of data we have due to the federal funding lapse. The December PCE is scheduled for February 20th. How's that for a backlog in 1 week? Talk about delayed data. So yeah, numbers come in line, and we're hotter than you want to be, but we're not accelerating. Right? We're hotter than you want to be, but you're not accelerating in that market. And that's what the Fed wants to see. That's going to give them some room. You know, you can be stuck at 2.4, 2.5% on a very, I mean, the Fed says it's going to take like a couple years for us to get back down to 2%. They give themselves ample room to get back down to their target. And so if it's not accelerating up, it can still be slightly above where you want to be, and they can make the case that they have the room to cut. 130,000 jobs added, unemployment 4.3%, and inflation at about 2.5%, 2.4% right now. All right, let's take a look at the metals market. Quite a day yesterday, folks. We've been talking about this remarkably light volume, okay? Even yesterday's sell-off, remarkably light volume. That was 155,000 contracts in gold. You dropped $200 in the span of 45 minutes. Yeah, from about 10:50 in the morning yesterday until 11:25, gold dropped from almost 5,100 to 4,900, and you only did 155,000 contracts all day. That's an extremely light volume day. We never would have seen anything like that. Okay, on days that you had declines of, here's a good day where you had decline of, what's that, $150? You're doing 324,000 contracts. You're doing 330. The real rip-roaring pullbacks in that October high were almost 500,000 contracts. Your pullbacks here were 400. We're doing nothing, man. Jump over to silver. A more pronounced sell-off for sure. But yesterday's sell-off of 85,000 contracts in silver, folks, outside of the last 3 days this week, right? Outside of Monday, Tuesday, and Wednesday, Thursday was the lightest volume day in silver. Going back to December 8th. Can't overstate how little volume we have going on in the metals right now in these prices. Platinum, very similar. Just a complete drop-off. Platinum yesterday trades from 2149 down to below 2,000. We're up by 2.1% right now for platinum. And we got the S&Ps flat, 68.51. Now, not the case with the S&Ps. That was some volume on that sell-off, man. Futures, doing about 2 million contracts, 1.993 on the S&Ps. And you jump over the NASDAQ, really similar action. Okay, all we did was we ripped lower to the lows of February 5th. We bounced on lighter volume, and we're trading lower with volume again. Be careful in this market, folks. Quality volume right now is lining up to the downside, especially in metals. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Folks, we got the S&Ps negative by 2 points. You were as low as almost 68.20 early this morning. You accelerate up to 68.60. You commit to that number. That was 8:30. You hit a high of 68.65. We backed off a bit. We got Friday trading, man, and we got markets with volatility. You talk about it. Gold contract. Now we got lower yield. You got a weaker dollar, and that's helping metals as you got the 10-year right now approaching 4.07. Let's see where we're at as I talk. There we are, 4.07 and dropping. Higher price, lower yield coming at you. The 10-year up another 8 ticks right now. Yeah, we got a new Fed chair. We got a new sheriff in town coming in June, folks. I'd be very surprised if there are cuts not coming down the line, especially if this is the data that we're getting. And it is right now. Jump over that dollar. 96.92 right now. And get ready for a volatile day in metals, folks. We got low volume, which actually increases the volatility. When you got less volume in a market, you can move it more dramatically. VIX right now, we pushed 21.92 last night. We're trading right now at 20.93 with that volatility index. Okay, Pinterest, watch out below. Man, talk about winners and losers in this market right now. So they cite tariffs, and they shock on disappointing fourth quarter earnings, and you better believe it, man. So the number they came in with is $1.32 billion versus $1.33 for revenue. Net income plunging 85% to 277 million from 1.85 billion. 541 million adjusted EBITDA, below the 550. First quarter sales below what they were talking about. They're coming in at 951 to 971. The market was looking for 980. Have I hit enough bad marks on this number just yet? The company absorbed an exogenous shock this year related to tariffs, more exposed to reduced advertising spend from large retailers. They're going to lay off 15% of their workforce. They're going to cut back on office space, and they're going to go all in on AI. And yeah. And so what happens? You have less exposure. You have tariffs hitting that. You have people that are exposed to tariffs spending less money on that website. Macro-related headwinds. Yeah. Management remains optimistic around its long-term growth strategy. I mean, what else is management going to say? Right? The stock's getting pummeled. They're in a worst-case scenario, it looks like. And boy, you are going to open at $14 on Pinterest, folks. I mean, what's out there? You're going to open below the lows we had in 2022. $10. $10, my goodness. Pinterest down $4 in the pre-market, down 20+%. Man. You jump over to Rivian. So, decent numbers from Rivian last night. You're continuing the run higher this morning. All right. And check it out. Vehicle deliveries, 62 to 67,000 units for the year. That's going to be up 47 to 59%. You know, maybe they fill a little bit of a void. Some of these bigger car retailers getting out of EVs. EVs are still around. They're just not going to be at the level that some of these big car companies imagined at one point. Amazing, right? Adjusted pre-tax losses for the year, a couple $1 billion. Capital expenditure, couple $1 billion. They basically have no money to spend on CapEx right now. They're just going to lose that money and borrow it. $2 billion. And that's the same that they basically had last year. 2.1 billion adjusted pre-tax losses. But when you're talking about ramping up deliveries, okay, there it is, 62 to 67,000 units vehicle deliveries this year. Now, you know, maybe it's $17, folks. These cars are beautiful. You see them around. They are beautiful. But this is something that you want to tell your children about, folks. I remember when this company went public in 2021. They're a pre-revenue company. It's like straight out of that show Silicon Valley. And there's that one scene from Silicon Valley, if you're familiar with it, folks, where one of the characters in the show is saying, no, you don't want to get revenue. The guy's saying, well, we start a company. Don't you want to like make some money? He goes, no, you don't want to make money. The last thing you want to do is make revenue, because then people ask you how much revenue you're making. What you want to be is you want to be a pre-revenue pure play. Because if you're a pre-revenue pure play, they can't question how much revenue you're making because you're the pure play. You haven't even started to make revenue yet. You're such a great growth stock, right? That who dares question revenue when you're not worried about today. You're worried about, Rivian, folks, is that ultimate story. Okay, now they had Amazon as the backer, but I remember this thing going public, okay, talking about jokes on the air. You're at $21 billion right now, folks. And that's at $17.50 a share. You have about 1.2 billion shares outstanding. Folks, they have 1.2 billion shares outstanding, and they were trading at $180. They were trading at $120. They were trading at $100 for a period of time. This was not one day. right? Weeks on end, you were trading above 100. That thing accelerated above 120 up to 179. They were pushing a $200 billion valuation for a pre-revenue electric vehicle maker. $200 billion. Remember that the next time you have some of these companies, and it's going to happen. All right, it's going to happen with AI for sure. I mean, imagine we're in the age now that Claude, Anthropic, raises $30 billion yesterday. They have a $380 billion valuation. I can't wait to try Claude more often. That's the truth. I can't wait. I've been in ChatGPT. I use Gemini a lot. I need to start digging into Claude because from everything I see, they're competitive, if not better, in certain areas, coding in particular. But how amazing is it is that their hook is we're not going to make money yet. That's the key, right? Ads aren't coming to Claude. Ads are coming to ChatGPT. At the same time, they're raising money on a $400 billion valuation. Now, that doesn't quite line up with Rivian. Oh boy, hey, a long story short. Nonetheless, strong numbers they're going to be producing. And yeah, we'll see what kind of pop we get today for Rivian. Up by $3. We're coming back, folks, for the open.
Is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
folks, we got the S&Ps. We kick off Inflation Friday. We got a soft CPI print. That number comes in at about 2.4 to 2.5% for headline and core. And you got the S&Ps slightly in the red, negative by 5 points. Now, that was yesterday. As we're looking at a 60-minute chart, we go back to a 5-minute for this morning. 68.46, almost right where we were coming into that 8:30 number. S&P slightly in the red. NASDAQ off by about 40 points, 24,733. The Dow, quite the trade lower yesterday, man. How about 1,000 points from where we were yesterday to where we were this morning? 50,400 to 49,400, just like that. We're negative by 19 points, and the Russell in positive territory, up by 12. Bitcoin testing some of those lower areas yesterday. You're up by $1,800 today so far, up by almost 3%, 67,405. Ethereum up by 3.2% as well. Crude down 13 pennies, and we jump over to yields, flirting with about 4.08 on the 10-year. 4.08. You got lower yield. You got dollar weakness at 96.93. And gold back above that 5,000, up $73 at 5,021. Silver right now up $2.74 at 78.41. Let's jump over to copper. Copper right now basically flat, 577. We take a look at some of the volume because these copper stocks have been extremely strong. You know, we got this spike higher January 29th. You pull back January 30th. Beyond that, you got copper right now. All right, we've been in a nice little consolidation basically since the end of December. Yeah, right after Christmas. Between about $5.60 and $6, we're right in the middle of that range. You take a look at the weekly. That matches up from that high you had back here. And I think it looks like copper's just kind of consolidating before the next breakout right now. Your weekly. I mean, look at the volume. It's nothing like what we had going on in that gold contract. That was a nice sign of strength on Wednesday, folks, on copper. You pull back, you had volume, but not as much as the sign of strength there. You jump over to gold. And yeah, there was no sign of strength on that move on Wednesday. Nothing. You got to pull back today. We're bouncing a bit. 5,025 right now. And, you know, we had a comment in the den. It's a great comment, Jimmy. The volatility. It has gone down since the beginning of February. Okay? But be careful getting lulled here, folks. The volatility. I feel like we're not. The volatility dropped $1,200 in the span of about a couple days. I mean, you went over a weekend there, okay? So you had Thursday, Friday, Saturday, Sunday, and so really it was a Friday into a Monday escalation, right? And then you caught a bid and you were back to 5,000 before you knew it. But until we get some volume back in these things, you can expect to see the type of action that we saw yesterday. $200 in the span of a heartbeat, okay? Silver, you're talking about a move yesterday where you traded from 83.40 to 73 and change by the end of the day. $10. Imagine, folks, we're dropping $10 in silver from the beginning of the day to the end of the day. And volatility in metals has gone down dramatically in the last 13 or 14 days, which it has. There's a lot of risk in that market. And if you're trading it, man, and you're keeping your eye on it, this type of volatility is a trader's best friend, right? Traders crave volatility. There you go. A true statement. But we are still in very, very, very volatile times. 3 varies there. Even though silver is not dropping $50 in the span of 48 hours, because that's what we're benchmarking against. And any other time, dropping $10 in the span of 48 hours would be the most volatile session we've ever seen. So keep those spikes up right now, and I'm looking for some more volume. We were talking about it yesterday morning. The volume is just staggering, and it's every single day right now. And the way that the price is appreciating with just very little volume. 101,000 contracts. I mean, everybody's talking about metals right now, as they should be. Traders especially. And you're getting moves where gold trades a week ago from 46.70 up to almost 5,000, and you only do 170,000 contracts. You continue that run, on Monday, and you trade from under 5,000 on Monday up to 51.11. That's a $125 run on 118,000 contracts. That's nothing. And meanwhile, this thing's escalating hundreds of dollars. That's what's alarming. If you can go up on hundreds of dollars in gold, doing about 100,000 contracts a day, well, we see what can happen in a heartbeat yesterday. And listen, this is, I think longer term, okay, you can have both views, as in I think we're a bit extended on lighter volume right now in gold. But I think this year in general, okay, we got lower yields coming at you today. Look at this run we have going on right now. From 111.17 to 113, we got a 4.08% 10-year now. We got a dollar that's stuck below 97, okay? Pressure's on the dollar, man. This move at the beginning of, end of January into the beginning of February when you were at those lows of 96, I think the dollar's under weakness. I think we could be heading back to 90. I think that's going to be great for metals in the long run. But boy, not encouraging the type of volume we have going on. All right, back to markets. We got the S&Ps right now. Boy, watch out, folks. 68.41. Yesterday we were at almost 7,000. You accelerate on lower. Listen, I look at the volume profile of this. I don't want to be a bear talking about metals and talking about equities right now. But if you're looking for quality volume in this market, folks, it's to the downside right now. Okay, we talked to Tim Ward yesterday. He was talking about the VIX ratio versus the market. Look at this VIX. I've been talking about this as well. Look at the run this VIX has had. Folks, we were at 7,000 a couple days ago. Why was the VIX going from 13 the day after Christmas up to 17 and change when we're at 7,000? Think about the level of price when you go from 1338. Now, yeah, who's pricing in? Remember this one too, right? Selling volatility on Christmas Eve, a great move. Just make sure you close it out when we get back from the holidays, because that's when the fun starts, right? I mean, look at it. Even though they were getting nothing for that premium, guess what? It made sense. All we've done is chop around. But here we are, folks. Okay, the VIX has been rising for almost 6 weeks, right? So when you think about that, the VIX has been rising for 6 weeks. We got the market chopping around near highs, and on a volume basis, man. Okay, what do? We trade lower on on volume. Look at the run higher on lighter volume. We rip lower on volume, we get you bounce on lighter volume. We rip lower on volume to February 5th. The bounce doesn't do it on volume. That was a strong bounce a week ago, for sure. But guess what? You came into that bar yesterday with 2 million contracts. That was 1.7 million. We'll see how today goes. The last thing you want to see, folks, is if you see this market break below last Friday with volume, watch out. Look at that IBRX. Congrats to you. Guys and girls in the den. Quite a rocket ship. All right, S&P's negative by 10 right now. Market slightly in the red. The Russell leading the way up by 9. Walmart shares down $1.10 after making highs last week. We're coming back, taking a look at more equities, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times the daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Watch out. Get your plan in place. Get a plan and trade that plan. Right? As my dad would say, you need a plan, folks. We got the S&P's down 40 points like that. Okay, 68.11. And boy, as I talked about, you're backing up into last Friday. And you ever get below this one with volume. And, we were talking about that VIX. Okay, so check it out. When that VIX was at 13 and change, right, was when the market accelerated in the week prior to Christmas from 67.70 up to Christmas Eve, ending it out at 69.80. VIX was dropping. Market goes up 250 points into Christmas. And pretty remarkable, right? That was when it was at 13. And meanwhile, a couple days ago, we're at the same exact price. We're just under 7,000. You have a VIX pushing 18. And then you look at the volume on a daily basis. Okay, and we got spikes, man. Every pop was on lighter volume, especially the one in late January. Very light volume. Doing 1 million contracts, 924 and 1.1, right? Then you're ripping lower on almost double that volume on every day, double that volume. Last Thursday, 2.03. And we got the NASDAQ coming into that similar area as well. Whew. From a volume basis, folks. Let's go to the weekly. You got lows out here from November 17th, of course, with some volume. NASDAQ 100, day negative by 0.3. We're going to have a volatile session. Yeah, we are closed on Monday. Market's closed for President's Day on Monday. So, even more interesting going into a long weekend action. Right now, digesting a CPI print that comes in light. Look at this volatility on gold. Man, we just dropped $40 in the last 5-10 minutes. And silver as well. Silver just, imagine the movements we're getting. Silver just dropped $3 in the span of the last 20 minutes, and no one's talking about it. That's the type of volatility we have going on in metals right now, right? That we have silver moving $10 from highs to lows yesterday. You have it dropping $3 in a matter of minutes today. And it doesn't even seem that volatile because we just ran up to $121 and dropped $50 in a heartbeat. And all we are is trading at 76. Folks, that market, okay, the week of January 30th where things really went haywire? Put it on daily. You closed at almost 85, right? You came back on Monday and you went all the way down to 71. I think that happened overnight in the futures more so. All you're doing right now is pushing the bottom of this consolidation that you traded in. There's nothing encouraging about this chart to find a bottom just yet, folks. The one thing I'll say is that you're back to where you were trading December 29th. Okay? We pushed it a little bit further than that, and you got October highs out here of near $50. It's not out of question, folks. $50, excuse me, was a historic high up until only a few months ago that we'd only hit twice in history. And gold, what's looming out here again, is those highs as well. Just a dramatic drop-off in volume. The only spike you got was on yesterday's trade lower. All right, we'll check in on Pinterest. Down by 22%. We hit 1384. Boy, watch out for this thing, folks. All right, we go into travel. Expedia. Down by 5.6%. Expedia. Yeah, emerging AI-powered platforms. Yeah, they identified AI platforms as a risk, even as opposed to results that beat expectations. And you better believe it, man. If all these agents, right, these AI agents, the agentic tools, if you can't book me a flight and an Airbnb, then you can't do anything. Because that is one of the easiest services when you think about it, just from a programming standpoint. Scan the internet, tell me the available flights, here's where I want to go, find me the cheapest one, get me a window seat, find me a hotel that's rated 4 stars or above, right? All this stuff. And I've used Expedia. It's a great service, but you better believe it, man. Down from 303 to 214. Whew. You just lost like 30% in this equity in the span of 6 weeks. 30%. That's how quickly this market can shake up, folks. And we're back to where we were trading in 2022 prices. Remarkable. Let's back it up further than that. Oh, man, look at this thing. You could be back to 2015 before you know it. Well, this is going to be the test, because you break below this 200 area, oof, watch out, man. What's next? Nothing. This has been a one-way trip from $100. Yeah, they beat on earnings, 378 versus 336. They beat on revenue, 3.55 billion versus 3.42. But boy, when you identify, and they should, because you better believe it's a risk, but now it's a material risk. It's a material risk that executive officers of that public company are addressing, and they're informing shareholders of this public company that, hey, we got a real risk here. And you better believe they do, man. Jump over to crypto. I mean, look at this. Coinbase is up 8% today. Can you tell it's even positive? This is your daily. This isn't a weekly. This is a daily. Yeah. You're up 8% today. That's what the chart looks like on a daily. You want to see the weekly? How's that look? Be careful in crypto right now, folks. Now, listen, I love the idea of trading this short term, trading it intraday, as long as you realize that you are risking almost everything you're putting in some of these equities. Okay, and I'm exaggerating a bit, but there are tail risks in crypto right now where when you're trading Coinbase that's worth $41 billion, okay, we're down from 450 to 152. You're down 65% from where this was trading at 6 months ago. To think you understand the full financials of this company, folks, the risks are substantial, and hence the rewards can be substantial as well. If you want to trade crypto, I think a better way to do it is to trade the actual crypto. You might get some more volatility, but there's risks that I don't think a lot of people recognize. It's the unknown risks, right? You got to actually recognize the risks of what you can't analyze in some of these crypto companies, because you just can't see some of the risks of what they're running. The unregulated nature of some of them. I mean, MicroStrategy, Michael Saylor was out there a couple days ago saying if Bitcoin goes down to 8,000, we'll just refinance all our debt. Like you just turn this key and everybody gives you a lot of money to refinance your debt as Bitcoin is crashing. Yeah, MicroStrategy down by up by 5.8%. And as I say it, we all have the ability to change, okay? But it is relevant that the man running this company used to run a public company by the same name, okay, that did this during the dot-com bubble when you went up to $333 before you went back to $2.07 in 2001 because they were playing games with accounting. And I'm not saying he's doing that right now, but basically Bitcoin, that's what you're teed up to do. It's created to have aggressive accounting at a minimum. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets clawing back those losses. That was a quick 40 points down, 40 points up. We got Friday trading. Look at this S&P. My goodness. Right after the open, you hit 68.10. It was 50 points up. Then we were back down. Watch out for this volatility, folks. S&P's down by 9. We're chopping around everywhere right now. Look at that open. 50 points down, 50 points up. Just since the open. And we're 20 points down since then. How's that for a quick 25 minutes of trading? Jump over the NASDAQ 100. Yeah, similar two-way action right now. We take a look at the daily. All right, let's check out yields in the dollar. You got the 10-year right now at about 4.08. The dollar right now just chopping around right below 97. Gold up by $75 right now, and silver. Boy, you saw what happened yesterday, right? Keep those spikes up today, folks. Friday trading coming into a long weekend. I mean, pretty remarkable. I had to do a double take yesterday. I got off the air at 10 o'clock. Things were normal. By 11 o'clock, I was seeing pictures of blood splatter in the Tiger's Den because there was red everywhere in this market. And there was. So keep those spikes up. We got another day of trading, and this volatility is kicking things off, man. Look at this. Market's in the green. The VIX sitting at 21.24 right now. You talk about some action. We check in on some of the equities with their numbers. Pinterest down about 20% so far this morning. Rivian on their numbers up by 20%. How's that for you? Giving up some of those gains on the open, though. $17.95 to $16.71. NVIDIA down by almost 2%. So NVIDIA alone, look at it, almost taken off, what, $85 billion in market cap? Just so big, so important to the market. NVIDIA off by 1.8%. Microsoft slightly in the green. Amazon, can't find a bid right now. Amazon trading at $198 right now. Google off by 0.6%, and Walmart giving back some of the gains. That was an all-time high yesterday for Walmart. And Walmart, folks, right close to a 1-to-1, A to B, C to D. Look at this. Started almost a couple of years ago at $50. You're pushing 132. Folks, thanks so much for kicking off your Friday right here. Stay tuned. Basil Chapman, he's coming up next. Steve Rhodes at 11, Fast Market at 12, Larry at 1, and I'll see you at 3 o'clock, folks. We're closed on Monday, remember. Larry, Basil's coming up.